And we are continuing our coverage of Scotiabank earnings with Martin Pelletier, the Senior Portfolio Manager from Wellington Altus Private Counsel, joining us now to talk more about it. And thank you very much, Martin, as always, for joining us. Initial reaction to the numbers?
Fantastic. And it delivered a strong quarter. Beat analysts' expectations, despite one-time restructuring charges. Earnings came in quite strong. Revenue was up 50% year over year. A nice increase in net interest income and a nice increase in non-interest income. So really nothing to complain about.
Where does this leave investors then when they look at Scotiabank? Does it ease fears that they were overvalued? The banks are overvalued? Where do we see this heading for the week with earnings coming from the other banks?
Okay, so I think the big question is are we going to see continued broader market strength? Because that's what's driving the banks here. Robust trading, business banking, wealth management, very strong mutual fund and brokerage revenues and trading revenues from the iBanking side. Retail, not so much. It's been okay. So those banks that have larger wealth management divisions, larger iBanking are going to continue to do well. The big question is that in valuations already? If you look at where they're trading at as a whole, the banks are at 13 times forward earnings. On the surface, that looks okay, but that's about a 25% above their longer-term averages. And so the big question is can they continue to deliver on that growth? Because the dividends yields aren't as strong as certainly as they were at the beginning of the year. So you're going to need to make up that the return potential from the growth, and that's going to depend on the broader market continuing to show that strength in 2026.
All right, now bring it back to Scotiabank. Their provisions for credit loss trend, how did that look?
Yeah, I mean, everything looked okay. There was really no surprises there. The bank is doing some changes internally, and they're making progress there. Hopefully, it can narrow the gap between it and the other banks. It's been lagging on performance this year. I think it's up 26% this year compared to CIBC or TD that are up. CIBC's up 37% and TD's up 50%. So there's a little bit of stock picking differences in performance in those names. And Scotiabank certainly making the right necessary changes to narrow that gap.
And under Scott Thompson, does it look like that overhaul isn't working?
It does. I mean, we don't own it. We own more of the basket of the names. We tend to lean more towards the TD and Royal Bank. Royal Bank hasn't performed as well this year, but offset by the strong strength in TD. Jefferies came out with reports saying these things priced to perfection, and that's the big question. Is the continuing changes at Scotia going to continue to generate the narrowing of its performance gap to its peers, and are the peers in general going to continue to show some strength?
And do you think we'll see more cutting? We saw some in Canada with them. Do you think we'll see more of that?
Yeah, especially maybe on the retail side, retail banking side. The broader Canadian economy is not on a sound footing. Bank of Canada has done a good job of being proactive and cutting interest rates, certainly a lot more so than the Federal Reserve. And now the Federal Reserve, hopefully maybe we'll see a rate cut that'll ease some pressure on the Bank of Canada in regards to the currency, because we don't want the currency to fall too far. But retail banking, I think there is a risk for the Canadian economy next year, and those with greater exposure to retail lending and retail banking within Canada are going to exhibit some weakness there, and hopefully that could be made up through continued growth in the other segments I just talked about.
Okay, I want to get to some stocks you want your clients to watch for. We'll stay on the banks just for first one. BMO, what do you like about it?
Okay, so looking at this sector in general, saying top down, I like the banks as a basket, and looking at them heading into the new year, I would probably look at trimming some of that back or looking at doing covered calls on some good on these banks. It could be Bank of Montreal, as you had mentioned, or Royal Bank, or TD. Bank of Montreal, I really like their wealth management division, BMO Global Asset Management. Outstanding department run by some really good people over there, and I like the growth that they've had within their wealth management side on the asset management division.
And I also read that in a hurry. You like BMO's ZWB.
Yes.
Sorry about that.
Where I'm going with this
it was a quick glance.
Yeah, no, that's okay. And doing the BMO, now that's part of their asset management division, is the ZWB, which is a covered call on the basket of names. It's yielding a 6%, so you're getting that extra dividend boost from the covered call space. And so if you're going to continue to own that space, the BMO ZWB ETF is a good one to own. And then I would be looking at maybe trimming back some of the bank positions and going into some other segments in the Canadian market next year.
Okay, and a couple of those you're looking at, Enbridge is another one?
Yeah, Enbridge, it's only up 11% this year. It's kind of boring. Nice dividend yield, 5.6%. It'll have a little bit of growth, maybe 3% growth. If you can bang out 10% a year on an Enbridge, and given where GIC rates are at and a nice dividend yield, I think that's a good stock to own. We do own it. And TELUS, we've been buying TELUS on the tax loss selling here, down at 18%. I know, $18. It's down 8% this year. Dividend yields over 9%. People think that they're going to be a dividend cut like Bell, your parent company, BCE. But if you look at the DRIP, it is able to, as long as that DRIP continues, to pay out that really nice juicy 9%. And I think it'll have a nice recovery following this tax loss selling season here. So we've been buying a little bit of that on the dip.
Okay, we'll wrap it up there, Martin. Thanks as always for joining us.
You betcha. Take care. Have a good day.
Martin Pelletier is Senior Portfolio Manager from Wellington Altus Private Counsel.